Hello everyone, Ranjit this side. So in this video, we will be covering the Confluence trading strategy, and then we will try to find the perfect entry and the exit points. So these are the topics that I will be covering. So first we will cover what is Confluence trading strategy with the help of the trading view chart. Then we will cover the calculation of the support level. Then we will convert the strategy to the algorithm with the help of the Python code. Then we will compare what we have created with the help of the algorithm with the tradingview.com chart. And last but not the least, I will show you the Pine code as well for the tradingview.com website for the indicators that we are using for in the Confluence trading strategy. So whether you're a beginner or advanced trader, understanding how to spot the confluence areas can significantly enhance your trading decisions, right? So let's get started. So let's first understand what is Confluence trading strategy. See, Confluence trading involves using multiple indicators or signals that align to indicate a strong trading opportunity. By waiting for more than one indicator to agree on to whether select a stock or not, we can make a more confident trade with higher success rate. In this trading strategy, we'll be using multiple indicators, which includes exponential moving averages, support resistance level, and Fibonacci retracement. So for exponential moving average, we'll be taking 50 days window. Now let's talk about identifying the entry points using Confluence trading strategy. So the key here is to look for areas where your chosen indicators overlap or give the same signal within a small price range. We will be using the list of Nifty 50 and the Nifty 50 next list of equities, or let's say the stocks. And from within that list of stocks, we will try to find the best stock which is meeting our strategy. If you see on July 3rd, 2023, the Dabur gave somewhat a similar Confluence trading strategy, or let's say the Confluence trading a meetup point of the support. So we have a support over here of 53.60, and then the Fibonacci level of 61.8 is also getting overlapped, and then the exponential moving average. So this is, or this could be one of the setup that we could go. We will go through the list of all these stocks, and the code will try to find the best stock for this particular strategy, and then out of that we will do the back testing as well. When you spot such a confluence, it's your cue to prepare for the entry. I typically wait for additional confirmation from price action like bullish candlestick pattern just to further validate the entry. Now let's talk about trading setup. So the entry point, it should be just above the last high confirmed by your Confluence indicator. So it should be just above the high confirmed by our Confluence indicators. Then the stop loss below the most recent significant low to protect against sudden reversal. Last but not the least, the profit target. I aim for at least 2:1 reward to risk ratio, placing my profit target twice the distance of my stop loss from the entry point. Now with this setup, we ensure that our potential gains are twice what we actually risk for. It's a fundamental principle in successful trading strategies. Now let's talk about the identifying the exit point. Now apart from knowing when to exit, is just as crucial as knowing when to enter. For exits, apart from hitting a profit target, we also need to monitor our indicators for signs of the trend reversal. If our indicators starts diverging, or if we see a strong bearish pattern, it might be a good time to consider exiting early to protect our gains. So now let's go back to the Python code to create the algorithm, right? So we do have a list of stocks, or let's say the equities. So our code will loop through each stock, and then it will find the best stock for this Confluence trading strategy, and then out of that we will do the back testing. So what this code is doing, so we are creating a placeholders for the best stock to be found, and then the return percentage, the recommended stock. So these are variables. We have created an end date. So this is the Confluence strategy path function that I've created. So we have exponential moving average that is being created, right, for the 50 days moving average, and the exponential moving average. Then we have a support logic. Now there is a small logic that I've implemented, which is a quantile. So let's talk a bit about what is 25% quantile. So the first step will be to order the data in let's say ascending order, right? Second one will be determining the position. So determine the position, and it can be found with the formula of, let's say, quarter 1 is equal to n plus 1 divided by 4. It will be the whole bracket th value, right? And where n is the number of data points. So these data points for us, it will be close columns. When we get this output, now we have to locate the value. So locate the value. Now if the q1 is not an integer, or let's say if the position is not integer, then we interpolate between the two closest values. Now I will give you an example. Let's say we have a list of close of multiple days. For let's say we have 5, we have 7, we have 8, 12, 13, 14, 18, 21 and 27. So these are the list of items. We have 10 items, right? So these are the list of items, and then we will try to create the first quartile. Now for this, let's order the data. So we are already, I think the data is already ordered. Now the second step will be order the data. Second step will be the calculation. So which will be quarter 1 is equal to 10 plus 1 divided by 4, which is equal to 2.75. And now since 2.7 is not an integer, which is not an integer, so this does not mean that it's not an integer, does not mean it's not a value, but it means it does not come in between any of these points, or let's say these values. So for that, what we will do, we'll take the second item and third item, which is our 7 and 8, right? So this is our second item and 8 is our third item. Now for that, interpolation will be done in a way. So the third step, interpolate, is equal to q1 is equal to 7 plus 0.75 into 8 minus 7 is equal to 7 into 0.75, which this is okay, which will be equal to 7.75. Now, so the Q1 will be equal to 7.75. So this is how the calculation that we did earlier for, now let me go back to the code of this one. So this is what the quantile 25% is, or how do we calculate the support on the chart, right? I will come on to the TradingView website as well. How do we calculate the support on the TradingView website? For creating the Fibonacci retracement level, we have taken the high of the close for a particular date, the low of the close for the, or the minimum of the close date, and then the difference, which is the high minus low, and then that's how we created the Fibonacci 61.8% of Fibonacci, right? So these three are the basic, or let's say the indicators that we are using, and then we are creating the confluence level, right? It's straightforward. And if these 2 points, let's say the support level and the Fibonacci level, or the mean of the Fibonacci level, are close, here I made the value points as 50, so that there can be a difference of 50 when we compare these 2 points. The same goes for the support level and the 50 exponential moving average, and then we get the support level and the data. So this is what the backtest strategy is doing. After that, we looping through each tickers. So now this is the main starting point of the whole code. For each ticker in this list of tickers that we spoke about earlier, it will go through each of them and it will download the data from the Yahoo website. So basically we are downloading the data from 1st of January 2020 to the June 2024. We are creating the support level and the data with the help of confluence level strategy that we built over here. So if the profit percentage is greater than the best return percentage, then it will go through the whole logic again and it will give us the best recommendation, I would say. So we are backtesting for this particular ticker, and then it will give us a profit per trade, or let's say the average profit per trade. I will show you the output as well, and then we are creating a plot with all those annotations being marked on the plot, right? So this is how the code will be running, and then after that the download data started. So it is backtesting for HDFC Life, which is giving us a 61.18% of return, which is really good. And then again, I think for Dabur also, yeah, backtest for the Dabur, it again gave 44.82%, which is again good. Now this is a chart that it has created, even though, see, now I did the logic, or I implemented the logic, or the data that we passed on to this algorithm was on the day level or the daily level data. But I would not recommend to work on the daily level data, but more on, or let's say 1 hour data, so that it's more specific when to make the entry and the exit. So we covered what is confluence trading, what we have covered. We have also covered the support calculation for the 25th quartile. We also went through the strategy of algorithm with the Python code. Now we will go through the comparison of the algorithm with the TradingView website or the chart, right? And then after that, we will go through the Pine code as well. So let's do that. So now, if you remember, our code gave us HDFC Life and the Dabur. So the yellow one is our Fibonacci level, right? And then we have the support level, which is our blue, and then our exponential moving average is purple. So there has been many times when all these points are coming very much close to each other, but they are not exactly matching. So that's the reason I was saying that, you know, it's better to work on more lesser number of time frame or less time frame. That will also, you know, help you to get more specific data. Now what the chart has suggested us to buy somewhere over here, which basically it's true, because now from here it is going up. And then for the HDFC Life, let me open that as well. So it's suggesting us to buy on 13th of June, profit percentage of 27. Wow, okay. And what was for the Dabur? It was 44%. So basically the trading, I mean the backtesting was done for both Dabur as well as HDFC Life, but it's suggesting us to buy for HDFC Life only of with a 27% return. It can give us a 27% return if we buy it on 13th of June. So let's go back. So 13th of June is actually, it's over here, 13th of June, and then it's asking us to buy. I don't know why, maybe probably because of the change in the market or something. But like I said, maybe you should be more go through it more. You know, I mean, you need to validate it. You cannot just go based on my, you know, code or anything, but try to play with the code as much as you can, and, you know, validate the data. See, what I would have preferred if it was like somewhere, if the code has given me a confirmation somewhere over, you know, over here or something. So it's, I think it's basically because of the daily data. Let's talk about the last point. So what I did for this particular chart, I created two code. Let's go through that. So this is the Fibonacci retracement. So when you see this Fibonacci retracement of 61.8%, it's basically the yellow one. So the yellow one that you see in this chart is basically the Fibonacci level, and for that the code is being created. So the input is 100, the title is length, and then we have a high point, the low point, and the difference, and the Fibonacci. It's the same code that I wrote for our algorithm as well, and then it's marking or plotting the chart with the yellow color of 61.8%. So you can maybe also use the same code to create the Fibonacci level on your chart. Now coming back to the second point, so let me show you the support level. So for the support level, again we have created an input of 20, the length, number of days, then we created the logic for the first quartile, which we already covered, and then it's passing on to the value, the calculation of the first quarter for the close prices over the specific period, and then we are plotting it. So you could have, I mean, I could have, you know, just commented this whole area. I mean, the background that you see over here is because of this code. So to recap, the confluence trading strategy, it's more about the strength in the numbers. The more indicators agreeing on the point means a higher probability of a successful trade. Remember, it's not about the quantity of trades, but it's more about the quality of the entries and the exits. And that has been the basic of stock market, I would say, right? So thank you so much. Thank you for watching today's tutorial on confluence trading strategy. Apply these techniques very carefully and always manage your risk. That's the most important part. Now, for more trading insights and strategies, make sure to subscribe to my channel and hit the bell icon and get notified about our latest videos. Till then, take care, have a great day, eat healthy and stay strong. Thank you. Bye.